Paper trading and real trading are two totally different things. They have almost nothing in common. It's very easy on a paper trade to throw things away and a lot of other things. Now, I'm going to talk about those differences as well as what I did with the software stocks that I bought recently. Stick around, should be a great video. Hello, my YouTube friends. My name is Adam Kahn, and this is Dividend Retirement. I hope everybody's doing well. Happy Wednesday. Today is February 11th. My God, I can't believe it's already February. And I'm going to talk today about paper trading as well as what I did with all three: Adobe, CRM, as well as Oracle, right? That was the other one that I bought. Now, Adobe and CRM, I took the loss and I got out of both of them. It seems like this AI narrative and software stocks are really getting pummeled. I do think they're oversold. At the same time, I bought them in my trading account. They are not something that's a set it and forget it. I wasn't thrilled to take a loss. A loss is something I'm never happy about. I just don't know how much further they may go. I still think they're oversold. If I see something I don't like and I'm having a losing trade in the trading account, sometimes I just kind of get out and move on with life. It still looks like things are rotating. I'm a little surprised on some of it, and some things are doing just fine. The market looks great overall. I'm really impressed how, I don't know if you guys had time to view the Set It and Forget It account. It seems to be chugging along okay. Today it was down, but generally it's been moving higher. And one of the things that I try to talk about with somebody in the comment section is I try not to get too uptight about one or two or even three stocks, because day in and day out, no matter how good the market's done for the day or how badly, it tends to be that you're going to have some things that are up and some things that are down when you have a big group of stocks in the account. Now, Oracle, I was fortunate enough to get out of really early, but then I bought some back at the end of the day. But that's why I try not to talk about trades too often, because I'm never really sure what I'm going to do with them. For the most part, my goal is long-term investing, where I just leave things alone. And as long as the portfolio is acting the way it's supposed to be, well, that's perfect and exactly what you would hope for. Now, keep in mind, as always, nothing in these videos or nothing in this video is financial advice. I am not a professional financial advisor, so please don't listen to me or anybody on YouTube when making the decisions for yourself. You really need to do your own research. I even suggest reaching out to a professional financial advisor so that you can decide what fits your life and your goals with your money. Now, paper trading versus real trading. It is so much easier to paper trade. The reason is there's no repercussions on any of it. If you think because you predict something on a paper trade that means that would equate to doing well if you put on a real trade, the reality is things work much different than that. Let's say you buy something for $20 because you think it's going to 30. And let's just say that you're right about that. It does go to 30. But along the way, it is not a consistent flow while it goes up to there. So maybe immediately you're really lucky and it gets to 22 before it falls down to 18, before it recovers and goes back to 23 or 24, all along moving every time. And if you're too focused on the short run, it isn't so simple to hold it from 20 all the way up to 30 like the way that you predicted on a piece of paper in the beginning. On a piece of paper, it's really easy to do it. Those fluctuations aren't going to impact you. It's also why I set up different accounts. Now, I haven't talked about it on this channel, so we'll talk about it a bit right now. I have a set it and forget it account that I set up, and I literally set it and forget it. If I buy a stock like Robinhood in it, it's a very small percentage of the portfolio. Why? Because I'm not convicted in a company like that. I'm not going to put a large percentage of the portfolio into something that I think is high risk. At the same time, I might put a 0.5% into anything like that for a total portfolio value of maybe 2% of what I invest in. Now, if you fast forward and you go to something like Chevron, I don't mind putting in 5% of the portfolio into a company that I'm not super concerned about it going out of business anytime soon. Even Starbucks, which has been a pretty lousy investment for me. I don't expect Starbucks to go to zero. My average purchase price on Starbucks is about $112 a share. That being said, I have a pretty sizable position in it. It fell all the way down below $80 a share. There was lots of bad news that Starbucks was going woke, that their sales were going down, and they were having problems in China and everything else. Well, I still believe in Starbucks. I don't think they're going out of business. It might have a rocky road going forward. It might not. But I still believe in the company and I'm not super concerned, so I have a larger position in it. Same with anything. So when I talk about different stocks, please keep in mind that the things that are lottery tickets and pie in the sky, I hope, not only do I mention that when I talk about them, but I put on very, very small positions because it's in an account that I don't really pay attention to, and I don't worry about one individual ticker. If it drops, the reality is the account might be up or down based on other things. I'm totally comfortable in Pfizer and Kenvue, even Kraft Heinz, which has taken on some debt, as well as Conagra, which I've talked about in other videos. I'm not super concerned about these companies, and I've done a little more research. Now, there might be information that's bad information. Like if you look at a company like Archer Daniels Midland a little while back, it came out that one of the board members was lying about the financials, and the stock fell a good 40% or so. These are things that you just can't avoid. So, what do you do to try to mitigate it? Well, you diversify. You have a decent amount of things that have some risk, you have a decent amount of things that are defensive, and they should play against each other. When the stock market is really booming, the defensive stocks are going to struggle, which is what we've seen for the past few years. Companies like Kraft and Conagra and Target and things that are often thought of defensive, Whirlpool and others, Bristol Myers, they were all really struggling, going the wrong direction, while Amazon and Meta and Google and everything was going straight higher. Now that the market's been struggling a bit and that the tech companies, as well, especially the software companies, have been having a pullback, you see a lot of these defensive names doing really well. In fact, I noticed that Altria was up to $65 today, and Verizon looks like it's breaking out to the upside at 48. Do I worry one way or another? No. That's just how things work. When the tech stocks are going down, typically defensive are going higher. And when defensive is going down, tech stocks are tending to go higher. So you take it with a grain of salt. When the indices are up, you hope that your account is up, and when they're down, it's going to be down. But the way that I find that you make money is owning these things for a long period of time to allow them to compound. And when you buy one of those really risky ones, recognize it was a risky investment. Either you got lucky and you hit a lottery ticket and it could go to the moon, or not. Like my bet on Robinhood is a 10-year bet. Either Robinhood is going to become the equivalent of a Fidelity or JP Morgan or something of that amount where its actual market cap becomes significantly higher in 10 years because the younger generation is older and they continue to have accounts with them, or they just don't, and it what's the word, flounders along, that's not even the right word, and doesn't do so great and doesn't amount to that. But I put little enough money in those lottery tickets that it's okay either way. But maybe you wake up in 10 or 20 years and wow, I got really lucky on this one. Now, forgive me for rambling about a lot of that stuff. As you guys who know me know, I ramble a good amount. But just keep in mind position sizing, what type of company you're buying or selling if you're selling, and try to make the bets appropriate for those type of stocks. If you're buying a company that you're pretty secure about, that you're not super concerned as to whether it's going to be in or out of business in 10 or 20 years, well, then the position sizing can be a little bit bigger. If it's a company that you kind of think, geez, these guys could go out of business, but I like that story and maybe I get super lucky and it 100x's over the next 20 years, well, make a tiny little bet. If it goes up that much, even a $2,000 investment, maybe you get super lucky. And if not, it's small enough that really, what's the difference? And please, if you paper trade, it's great that you think you're right, but don't kid yourself. At some point, you actually have to make investments. I'm really comfortable. I've been doing this for over 30 years. I've been fortunate enough to be able to cover my family's bills and live my life based mainly off of trading. I've picked up jobs here and there, but I started as a commodities trader on the floor in Chicago in 1995. I traded through the dot-com bubble. I've traded through the 2008 financial crisis, COVID, and markets are markets. They go up, they go down. You just have to kind of recognize it and get used to the movements. Anyway, we're going to keep it short. It's late in the day. I've been real busy running around doing stuff with my family and waiting on my son. I can see that they just got home, so it's time for dinner. Either way, hope you liked the video. Do me a favor, make some comments in the comment section. Let me know how your account's doing. Hopefully everybody's near highs, because despite the turbulence, the markets seem to be holding up pretty well. Have a good day. Bye-bye.